Hey everybody, welcome back. Sive is here with the forexpeacearmy.com. So let's keep an eye on the euro currency once again. In general, the actually assistance with our trading plan that we created last week with a possible pullback to the 1660 area that we were waiting actually almost the whole week now has been done thanks to Donald Trump with his statement of the new agreement with Iran. Right in the Monday open, we've got the jump. You can see market actually immediately touched the 1660 level, completing some intraday patterns that we have specified. So the entry for 1660 has been done. So theoretically, we have the short position here. If you do not have it, you plan to take it later. Just keep an eye on the possible pullbacks to this area. Those who have taken position, you could hold it. Just move stops to break even and see what will happen, because this position quite great, because at this point you are positioned as for direct downward continuation as just for minor pullback. So chances on this pullback that we're getting right now is really high by the two reasons. First is because of the pattern that we have currently on intraday charts. I will show you a bit later to you. Second, you can see that we have the gap has been formed on Monday, and chances that market will try to close this gap is really high. That increases the probability that your position will be in profit really fast and lets you to move stops to the break even. Currently on the daily chart, trend remains bearish, so we still keep the bearish context here. And let's have a look what we have on the intraday charts. In fact, I see another pattern that might be interesting, and actually whether the upward bounce is over, I'm not sure that it is. So because just have a look at this one. That's our initial suggestion. We said great bullish pattern, two grubbers, suggesting to jump above this area, retesting 1660 and so on. We've got it. Here is the pullback. Channel has been broken up. Market right now is trying to close the gap. At the same time, if you carefully will take a look, I will show on the hourly chart. Here we could get more extended, potentially, reverse hand and shoulders pattern. This pattern doesn't contradict to the things that we see on the dollar index. On the dollar index, it's more look like the triangle, but dollar index has the same gap, and at the same time, it has a big reversal pattern, which means that potentially it could try to show a bit deeper retracement when it's forming the hand and shoulders, reverse hand and shoulders pattern, and it's suggesting that it's good flirting with somewhere with these bottoms. Correspondingly on euro currency, theoretically, I'm not definitely sure that this will happen, but theoretically, market keep chances on the possible this pattern. So that's why the positioning around this area where a neckline stands, it's quite handy, because you're standing in a point where chances on the pullback are very high, as because of the pattern, as because of the existence of the gap, this market trying to close. So that's the things that we see here. Correspondingly, if market will able to hold above the 116 area, close the gap, it keeps chances on a possible larger ABCD retracement here later. If it start failing, closing the gap and moving lower down to the 1580, 1575, as definitely will tell us that probably pullback is over and we're ready for deeper downward action, continuation of the daily trend direction. So for this purpose, the gap is taking specific role. So it also might be used as an indicator, as a signal. Because if market will able to stay above this gap, just retesting the lows of the week and hold there, starting showing the pullback, that will be bullish sign, suggesting possible upward continuation. If market will close it and move below the lows of the week, because actually it is open here, it will be bearish and increase chances on downside continuation. So that's in fact what the background we have currently on the table. What we could do in the current circumstances. First of all, if you take in the short position here, that's great. So just hold it, watch what will happen around it, how market will try to close this gap. If you haven't taken it, theoretically on some minor pullback, you could try to do this again. So market is just starting this motion, and you could take another attempt to do this if you would like to. The minimum target of all this bearish position will be the closing of the gap around 16.5, 16.14, these support areas, and in general an area of the bottom of the gap. But also don't forget, as I said, that you might be possessed for downward continuation with the same position. It's logical will be here, for instance, take the half of the profit and keep the rest of the position, or at least some part of the fraction of the position, for a possible failure here and possible downward breakout. If you're a scalp trader and would like to trade it on the long side, you have to do the same things but in opposite direction. So now you're just sitting on the hands waiting what will happen around this area. Once market will reach this support area, that will be your point where you will have to make a decision. And here you could drop your time frame even more, say to the 15-minute chart, and watch for the bullish reversal patterns. Hand and shoulders, butterflies, as usual, all this stuff. Once you could see that some support is forming, that tells you that you theoretically could try to take the position. Taking position in this area, just minimize your potential risk. So that's the general conclusion. Also, keep an eye on the fall time frame chart is flirting with the MACD. If we'll again hear the grabber, that also makes sense, because it might be some supportive factor. For instance, market could show some spike here, close the gap, and then return it back up. So if the grabber will appear, actually chances not very high, because the bottom of the right arm for this big pattern has to be slightly lower. But still, who knows? Just watch for this. This also might be important. For example, if grabber here will be formed, it could mean another thing, that market could try, for instance, return back to the top first, showing wash and rinse of this top, as this will be the target of the grabber, and then could start real downward action with the right arm. We also can't exclude this type of action as well, because market stance right now is very volatile, and actual reaction on all news and all breaths that's they see in Twitter as any news. So that's also might be the case. Just control this major important patterns and see what will happen. But in general, we could say that probably at this point, with this possible pattern in place, we can't say that the upward retracement is over already. Second conclusion is that the same pattern we could use for both directions. As for direct upward action, if it will be able to stay here, as a confirmation of the starting of the bearish action, if it will fail to hold above 116 area. So this pattern is useful not only for the bulls but for the bears as well.